Test. Yep, awesome. Okay, for those, apologies for the technical difficulties. I am not an OBS master yet. So, but for those that are on YouTube, my name is Spencer Riegle. I am the Chief Options Crypto Trader and Strategist here at DARMA Capital Trading. We are starting the session off a little bit different this week. The announcement is we launched our website, so feel free to hop over there, dharmacapital.trade, drop in the Discord any recommendations, any questions. Very, very curious what everybody thinks. So let's hop into it. So as I said, and this is the Bookmap podcast, right? My name is Spencer Riegle. You can find me on Twitter, so _RIEGLE. We post the recording of the weekly Bookmap show that we do, and then you can also reach out to me on LinkedIn. It's just my name, so Spencer Riegle. But each session in which we hop on weekly, we start off with some disclosures, right? And the reason for that is we are in a game of risk, right? And so our job is to manage risk. Our job is to assume risk, but it always starts with what risk is on the table first. So let's talk about the disclosures. All information in presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosures here are trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. We like to talk about this piece of it as risk capital, right? If you're going to trade in the markets, understand that you can lose everything, right? And we call that risk capital. Risk capital we define as money that is not going to impact your life if you lose it all, right? So if you need to pay a bill on Friday and your trade will impact that decision, that is not risk capital, right? You should pay that bill instead of taking that trade, right? A couple of reasons for that. One is it's fiduciary responsibility. It's a smart thing to do. Two is it's always about psychology too at the end of the day, right? And so if you're thinking about that bill, you're not approaching markets on a rational basis. You're not looking objectively at what the market is giving you, right? So that is what we call risk capital. So you can find us at dharmacapital.trade. That is the new announcement for the week. But for those that hop on weekly, kind of how we go about this is we talk about macro events. Then we kind of get into a little bit more of the micro, right, on a weekly basis. So we try to hop on as frequently as possible, right? If markets are active, sometimes we're on the desk. But with that being said, we see kind of the micro when we're able to hop on is on a weekly basis, right? And then we get a bit more granular and we look at the here and the now, and we look at Bookmap and we see where that liquidity is resting in the book, and then we apply that to our weekly outlooks as well, right? And so then we wrap up each session, kind of strategy, thinking about markets and how to exist in them, right? So assuming risk and also risk mitigation techniques, right? So what are the macro events that have happened in the last 7 days? Well, one is February's done. So we are in, and it's kind of flying by, but we are in the last month of the quarter 1, 2025. That matters. The reason that matters is on a time frame structure for those that are looking to put crypto on their books. This is the last month in which they can do it, right? And so kind of on a fundamental structural aspect of the institutional side, if Bitcoin, if Ethereum are doing well, right, and clients demand that, hey, look, I want to be long Bitcoin, I want to be long Ethereum. It is the mandate of these funds. It is the mandate of larger money to make sure they have it on their books, right? Discretionarily, funds then put it on at prices in which they deem to be fair and prices in which they deem to be value, right? Because the market is down, the buyer has a little bit of time on their side, and they also have basically it's a buyer's market, right? So the sellers are selling, so they do have time and they can wait to allocate for those prices, right? Now, with that being said, there are some larger macro events that did happen over the weekend to start the beginning of the month, and that is out of the Trump administration. We've been talking about this since probably August, that this administration was going to be quite impactful on the overall market of trade, right? And part of that reason is, I mean, we have a 4-year term to look at, right? In that 4-year term, if you kind of wind it back, was a bit polarizing from a kind of civil aspect, but it also impacted markets, right? And so when we're thinking about trading, we're thinking about a little bit of both and how that impacts our trade, right? And so the announcement over the weekend, and I actually have it pulled up so that we could run through it, is the Trump administration is moving forward on a strategic reserve, right? And so there was coins listed. There was also things that were listed within the actual executive order, right? And so let's kind of dive in. I have, this is just the Financial Times. This is an article from 2 days ago. I figured we could just go through it. And then for those that are very interested in kind of what this means, feel free, and I would recommend to dive into the actual executive order to better understand everything, right? And so summary of kind of what was going on, right? So if we read kind of the first few articles, Trump said U.S. strategic reserve of digital assets would include Bitcoin as well as lesser traded tokens, right? Specifically, those tokens that were listed were Cardano, Ripple, Solana, and then he later on followed up and said that Bitcoin and Ethereum obviously would also be included within that. Couple things to think about is the crypto super PAC widely funded and lobbied for the Trump administration, right? And so there are a couple larger macro themes to think about and not just focus on particularly this headline. Over the last few months, we've been talking about the macro behind crypto is fairly supportive for the first time out of a U.S. administration. What does that mean? Well, that means that Coinbase CEO pointed out kind of the night of the election that 219 elected officials out of the U.S. Was the largest number that we've seen kind of pro-crypto, right? We also saw that crypto super PAC, Trump's administration, did have lobbying dollars from crypto people, right? So that largely they're putting money behind the administration, right? We're seeing the likes of positive members of the administration pro-crypto, right? And so widely speculated prior to the administration taking office was the Wells notices that were kind of widely handed out in the Biden administration would kind of just evaporate, right? And so for those that have kind of been paying attention, out of the comments out of the SEC last week in particular was Gemini's lawsuit, right, out of the SEC is changing. Coinbase is changing, right? Consensus is changing, right? All of these lawsuits that were being pressed. And Wells notice, for those that are unfamiliar, and I'm by no means a lawyer, but I have done a bit of research just to try to understand the trends and how this will impact the market, it is a notice prior to an actual prosecution, right? And so this is basically the SEC coming in and saying, look, if these things do not change, we will actually press charges. And obviously that all changes when the administration changes, right? And so while the Biden administration was heavily pursuing these, the Trump administration was widely speculated that all of these prosecutions, all of these Wells notices would sort of kind of just evaporate, right? And that's exactly what's starting to happen. That continues to favor the macro environment. Why is that favorable to the macro environment? It's less out of prosecution. It's less out of scare tactics, out of government bodies. It's more out of pro-business, right? And the reason for that is absolutely positive actors within the crypto space want positive regulation. They want to understand how to interact in the marketplace and better progress the industry, right? Nobody is against that. However, when they are faced with lawsuits, when they are faced with without a guidance out of a major regulatory body, it creates a lot of overhead expenses in terms of legal, right? There are companies that had to do layoffs when they were faced with Wells notices, right? And the reason for that is because they had to amp up their legal counsel, and part of that is these companies are either going to be venture-backed or they are going to be on a revenue basis, right, that impacted the larger market on a market cap basis negatively, right? And a lot of these companies are holding crypto assets in their treasury, right? And so when the market goes down, they get hurt in both ways, right? And so they have to finance basically fiat services in terms of counseling, legal counseling to fight these litigations. But they also have operating costs, right, that are in fiat-based outcomes as well. And so if the market is down, their treasury is down, then that becomes incredibly more expensive, right? And so that is why dismissal of some of these legislation litigations is positive from a macro standpoint. Another aspect, right? If the U.S. is taking a stance that they are stepping forward on a U.S. strategic reserve, that does open the door for larger nations as well, right, to step in outside of just the U.S., right, and say, we'd like to allocate X percent of our treasury to crypto assets, right? And crypto, on a relative basis, is incredibly small, right? The market cap of the total asset class, right? If we pull that up, let me pull it up. I might be able to get a figure for us. Let's do that. And let's see, I can do this. And make sure. Let me see if I can pull that up. We can do, right? If we pull up coin market cap and we take a look at kind of the overall market cap of the space, right? We are looking at 2.83 trillion, right? That is a very small, industry relative to the rest of the global economy, right? And so there are things that directly impact these, right? And large nations such as the U.S. stepping in and saying, hey, we'd like to allocate to Bitcoin has a very drastic impact and very drastic potential impact to asset prices going forward, right? Now, all of these things are just happening here and now, right? So let's talk more about kind of how the market's kind of digested this and what that means for us on less of a broader picture, right? We can deem that, yes, all of these things are positive, but price here and now doesn't have to always reflect what a macro positive event is, right? So with that being said, let's kind of dive into weekly outlook and take a look at some of the more microstructure of the market currently. So I have for us to take a look at today specifically, I have a couple different time frames that we're going to take a look at. And the reason for that is for those that tuned in last week, we went over a little bit of data analysis that we do internally, but I thought it was quite interesting to share. The reason for that is the markets are very interesting currently, and meaning if you take a look at Bitcoin, and let me pull that up for us so that we can, I'll zoom in, I believe, let me see if that is visible for those that are on YouTube. I believe it is. Yes. Let me drag this over a bit, and then let me drag this out a bit. Okay. Oops. Dragged it out a bit too far. All right. So, reason for that is we are in the last quarter of the month. That means that our expectation of realized vol environment for the first 7 days always currently is fairly high, right? A couple of reasons. One is new money has to be allocated, right? End of month, new month, rebalancing has to happen for one. For two is this is the last month of the quarter, so it does matter. For three is for those that kind of follow risk broadly, crypto is not the only volatile asset currently, right? So the S&P is getting sold, the NASDAQ is getting sold, right? The U.S. Treasury volatility is some of the highest it's been in a while, right? And so volatility on a kind of global standpoint is here, right? And so there's a couple theories around volatility. Just because volatility is high does not mean it has to be sold, right? There is a level in which makes sense for funds to step in, for institutional players to step in and mean revert vol, right? It is an advanced strategy, but it does not mean that absolutely vol needs to compress. Inversely, just because vol is low does not mean that vol needs to go higher, right? Vol can stay low for a significant period of time and trend lower for a significant period of time, right? The reason for that is volatility as kind of an asset class, thinking about it broadly, doesn't benefit anybody but traders when it's low, right? Traders want vol to be high. The reason for that is traders like when there's movement in the markets. When there's volatility is low in markets, it actually becomes a little bit more investable. The reason for that is future expected returns have less of a roller coaster outcome. Now, inversely, when volatility is high, it doesn't create a safe space to also step into markets, right? And so while you can pick places to invest, larger capital usually doesn't want to allocate fully when the roller coaster is doing something like it is currently, right? Now, with that being said, let's take a look at the weekly outlook. So for those that are unfamiliar with what we kind of present on a weekly basis, what we have on the left is our it's our analytical, statistical, sorry. It is our data, right? So we call it the price map. It is our quantitative and qualitative assessment of the markets, right? It's dating back 30 years that it's been worked on, and it continues to be worked on to this day, right? What we presented last week and what we focus on particularly is the critical range. In critical range, we define as the UP down to the DP. That's basically 94 down to 81.5, right? That is somewhat the expected range of vol on any given period. As we take a look, we found that on any given week, there's about a 61.5% chance that either side of trade will break. And then within that 61.5% chance, there's statistical norms outside of that range, right? So the expectation based on this week, you can see was here's to meet that qualifier of 61.5% chance, right? The expectation is the R level, which we see to be the sentiment bias of the market, is negative, right? So the expectation is the market should fail into that level, right? And so I know it's a bit behind the scenes as this kind of happened on Sunday into Monday, and we are kind of broadcasting on Tuesday, but we have another side of the trade that we can take a look at, right? And so what happened here now is, yes, absolutely that trade when everybody was getting bulled up and expecting, yes, all-time highs again and U.S. strategic reserve, the data actually suggested that's not the case, right? And the data suggested that more times than not, that level should fail, right? Or that level should at least start to stall into that 98, right? And so that is what the data was suggesting. Now, that trade basically holds true until we test this critical, this CR plus, right? And we see the CR plus is that brown level. That is what we consider to be a half APMD. A normal bull trend will build up trade over here. If it runs and breaks, the expectation is a normal bull trend should hold that 90.76, or sorry, that 97.95. If it doesn't, you're not dealing with a normal bull trend. You're kind of dealing with more digestive range trade for the week, right? So coming to Monday, we bid up into here, immediately a failure, right? Retest of this level, can't break, can't hold. That's the signal to say that you're actually not dealing with a runaway bull trend on this news, that you're potentially dealing with a digestive trade, and that digestive trade mean reverts, targets the mid again, right? And that directional we see as the over-under number on the week. That is, if the market is holding over it, you can remain positive, right? There are levels in which you want to take risk, and there's levels in which you don't want to take risk, right? Into this is when you want to think about the opposite. Start to think about potentially re-adding here, right? But if that level can't hold, immediately have to think about risk mitigation tactics, and that's basically just stopping out and waiting, right? Now, with that being said, what is abnormal of this week is the full critical range trading back down, right? What is here and now, and the expectation of here and now for the remainder of the week, and that is through Saturday, is a couple different things. The data suggests a breakout of the critical range defined here is normal. That happens 61.5% of the time. A breakout of both sides of the critical range is abnormal. And so while a trade down to here looks incredibly bearish, again, if you're thinking in terms of volatility and you're thinking in terms of normal distributions, if you are short, it is time to start thinking about the reversion back to the norm, right? And to the mid. And so that's exactly what the data tells us here. That's what, to the tick, exactly what happened today and off of this morning, right? And so the expectation for this trade is, for the remainder of the week, as long as we can hold over 84,680, a reversion back to 87,851 is normal. We could actually do that before tomorrow's close. We can probably do that even before today's close based on how we are moving. Based on the data, the realized environment expectation will likely remain active through March 7th. That's the first 7 days of trade. The fifth day we see from the data to be the highest level statistically over the last 4 or 5 years for a large realized move, right? And so while the extremes of this move off of this news event seem to be extreme, they are on a relative basis. But as long as 81,509.5 holds, the expectation is just a reversion back to this middle, right? That would happen potentially over the next few days if you can get a solid base over 84,680, right? That's your line in the sand for this trend. Continue higher and test that mid. Again, at the mid, the market needs to make a decision, right? And that decision is relatively undefined after what this large range is, right? And so that's basically the weekly outlook. Let's take a look at where that resting liquidity is in the book of Bookmap, right? And let's talk a little bit about macro and why that matters as we are thinking about just statistics. Data and backwards data and back tests need to be treated as that, right? The age-old saying that future returns are not indicative of past results very much is true, right? Just because you have data doesn't mean the market cannot outperform your data, right? And so as we operate in markets, that is the risk mitigation technique, right? As you approach 81,509.5 today, know that the data suggests there is a lesser likelihood that we break this lower level. All that means is you can remain short, but you should probably cover something, right? That is prudence in the market. Why? Because it doesn't matter what you feel should happen. It matters what the norm is that happens, right? And prudence means doing something with kind of acting rationally in markets, right? So yes, absolutely, the market looks like it's going to break, but if the data is suggesting that the market's not going to break through this duration, which we've defined to be Saturday at 0 UTC, then somewhat of a covered 25% of your position makes sense, right? Work the balance, right? And that's how you operate in markets reasonably, right? And assume risk and mitigate your risk, right? And so here now, what do we have resting in the book? Currently, if we kind of zoom in, and on the right side here, let me make sure that I get a accurate micro view of the market. On the right side is Bookmap. Everybody on the stream should be familiar. If you're not familiar, make sure to hop into the Discord, ask questions. We are in there every day. Even if I'm not commenting, I have it up on my screen. So we have resting liquidity sitting at 86,500, right? Markets love to test liquidity, right? And the reason for that is bigger players see resting liquidity as an opportunity to execute their size against, right? Also, market makers, their job is to facilitate transactions, right? If they see a willing seller in the market and they see a willing buyer in the market, their job is to facilitate those transactions, right? There's a lot of theory behind there. We do not have to dive into the weeds here today, but 86,500 is on a micro structure where to take a look at willing sellers in the market today, right? And so while we have the weekly up, let's take a look at the daily just to kind of get a reasoning and understanding. We support multiple different durations that we use to assess microstructure of market and more macro structure, right? We support all the way out to yearly and quarterly data and analysis, right? And so why would that 86,500 be resting in that book? It's just over the previous day's close, right? Previous day's close is a psychological level. Anybody that bought the lows yesterday is underwater today, right? We can apply the theory there that potentially they're looking to get out, right? Let me zoom in because I see that it's not very readable or legible on YouTube. Yeah, so let me get a rectangle just to kind of show a bit more. Where is the here it is. Yeah, so this is the resting liquidity that's sitting in the book in Bookmap, and it aligns right in line with that previous day's close, right? So that would be your minor level to think about this rally, right? So if we get a test of that 86,500, understand where that seller is, and if they get taken out. If they get taken out, again, you can lean on some of the more larger time frames, right? And that larger time frame is in alignment here up at that 87,851, right? And that would be normal, right? Based on the range in which we've been trading over the last few sessions of the week, right? And so larger liquidity resting in the book on Bookmap is going to be sitting down at 77, right? That is basically just down to your previous week's low area, just under that. So anybody that's panicking into that and has stop losses down there, if we do break this level, the normal expectation is the low statistically from our data would be right around in this area, right? And downsides can and do tend to have a skew to them from what we've seen statistically in the data. And so we see normal trade all the way down to basically 72 in the session. That would be Saturday. So if we do break the 81,509, the concern would be a trade down to 72 you do have a large amount of willing buyers here. If those willing buyers don't get taken out, then expect just a quick bounce back, right? And so now your willing sellers in the market, that's at your 94 level. Why would that be? Again, that's your recent high. That's your weekly high, current weekly high. That's your normal kind of expected range of trade, right? And so we see normal to be a little bit tighter, right? So 81,509, we've already broken out to the upside. That's kind of the defined downside that we're looking at. If the 85,509 and a half does not hold, look for your cash buyers that are sitting in Bookmap, right? Cash willing buyers in the market by nature suppresses volatility. The reason for that is they support the bid, right? And so you get lesser of those drastic tails, and you get kind of more of this choppy action, which is relatively vol compressing, right? Let's hop over and take a look at Ethereum. Ethereum has been underperforming for the better part of last year, right? It turned a ticket in year to date last year, or its 2024 returns of just over 40%, while Bitcoin did 125%, right? So it consistently underperforms. It has consistently underperformed still this year, right? So that narrative, and it remains in kind of a larger macro downtrend. That narrative hasn't changed, right? And so as much as people want and are looking for kind of that hope that this is the time that ETH really outperforms Bitcoin, we haven't seen it. And that is the fact of the market, right? And so while that doesn't mean it can't happen, it is a lesser market cap, right? And so while liquidity coming into the market can press higher returns, it just hasn't happened yet. And you can see that in the Bitcoin ETH ratio. So the outlook for the week on on Ethereum, on the left side, again, price map, weekly outlook. It's a bit tighter, right? And so we didn't break to the outside or to the upside of the UP, didn't break to the downside of the DP. We held the DP, right? This is your critical range. Again, if the market supports this 2085, have to assume that the lows are in, and where those lows going to target, because of just the range of trade and the natural vol tendencies for this time, right? Seasonally, first 7 days of trade tend to be a bit more volatile, right? Latter half of those 7 days. For day 4, day 5, day 6, particularly, a reversion right back to the mid would be normal again, right? And first, you got to get through that previous week's close, basically 2220. And your resting liquidity is setting here 2180. So you have a tight liquidity band here in Bookmap on the right side, 2100, your resting bid up to 2180, right? Some of your willing cash buyers, which are interesting to kind of take a look at, where are they sitting in the book for kind of that quick V bounce if we do get a break. 1800, 1950, right, which is basically in alignment with that DP. And then again, 1600s, 1700s, right? Where does that align with what would be a statistical